Mr. Kranthi Bathini of WealthMills Securities. Thank you for joining us here on News 9, Kranthi. Always a pleasure seeing you. What are you making of markets at this point in time? Because, brilliant week for us. We have hit lifetime highs for the third day in a row, actually. The banking stocks, they are finally performing. HDFC Bank, that has finally found some support. What's your sense of things, sir?
Yeah, good morning, Suyash. That's the beauty of the classic bull market case, Suyash. The leadership rotation will happen in a bull market. So whenever the weakness market try to exhibit, the classic case with bull market, what happens is the leadership will be taken by the other underperforming sector to make the indices on a higher level or keep the momentum in a positive territory. That's what happens in a bull market. Right now, the specialty of the current bull market is right now, in earlier previous bull markets, what was happening was it was the FI flows have been coming from a few prominent players, or the show was run by DIS. Right now, it is the DIS and also the retail has been key participants in this bull market, and the speciality for this, especially for this bull market, is the global world is looking on India. They have giving enough attention towards the Indian markets. How the recent the budget is always a internal document, but the majority of the FIs have been following the capex cycle in India, and the classic case how the growth prospects of India. So the focus in the global arena right now is yeah, on Indian markets. So that's what keeping the Indian market so buoyant. Last week we discussed when there was a sharp decline in Indian markets. Uh, Understanding this liquidity in the market and the positive sentiment in the market, we are pretty much sure we'll see a bounce back. But taking these things in granted, one should not ignore the facts. One should be vigilant. One should not forget. They should be in senses what they're buying and what they're keeping in their portfolio. That is extremely crucial at this point of time. Right now, coming to your point, the banking stocks are coming back to the flavor right now because the banking is treated as the epicenter of the growth, center of the growth. So when the economy has to move on, the banking has to be the key participant, and Indian banks offers a strong franchisee of growth in India. So definitely, FIS interest tend to be on banking and financial services on a medium to long term perspective. Or might be in short term they might underperform because of the tight monetary policies and all, and the credit growth and all. These are the short-term headwinds, but on a longer-term perspective, definitely the banking and financial services is one of the key sector to watch in India.
Good morning, Mr. Bathini. Another sector, like you talked about, a bounce back, which is looking towards for a bounce back, is the tech sector, tech space in India. That has been under some stress. In the US, Nasdaq saw one of its biggest declines in anticipation of Nvidia earning reports that are supposed to come in today. My question is it going to rub off in India tech sector as well, or is a bounce back likely in the tech space, which has been under stress for some time? What do you foresee?
Currently, what the dichotomy in technology sector, Indian IT space is concerned, the mid and small cap ITs are surprisingly outperforming, whereas the bellwether IT companies, the large caps, the big four, have been under the range bound some point of time, and we can see some kind of selective buying, staggered buying also emerging in the large IT companies are concerned. We don't say they are underperforming, but they are consolidating at this point of time. The dichotomy is the large cap IT companies, how the things are going to emerge, how the US economy is going to behave in next couple of quarters. That is extremely crucial. This overhanging is creating some kind of pressure with respect to the large IT stocks in India. It can be TCS, Infosys, and the large cap bellwether IT companies are concerned. Whereas the mid and small cap IT companies, like we can say Persistent Systems, KPIT Technologies, and different types of companies, because of their specific domain they operate and also the specific geography they derive the revenues. The mid and small cap IT companies have been outperformers despite of the broader underperformance in the IT sector. We need to wait and watch with respect to the large cap IT companies are concerned. Next couple of quarters, how the growth prospects in US is taking place. But definitely on the and the at the ground level, US economy looks quite strong. But how the movements of Federal Reserve is going to create a tailwind for the IT companies, especially the large cap IT companies, in a medium to long term.
All right, and Kranthi, speaking of the Federal Reserve, now inflation data, their focus is clearly on inflation, and inflation, both wholesale and retail, came in hotter than expected. Now, this perhaps would have some bearing on when Fed will go for that rate cut. What do you think? When is that first rate cut going to come in the US?
Right now, everybody crossed fingers, Suyash. Everybody waiting for the rate cut. But rate cut is imminent, but the timing is crucial here. But as I mentioned, the US economy exhibiting its strength in terms of the growth prospects are concerned, and the job data and all the macro data that is coming with respect to the US economy is concerned. And the US is heading for election this year. So the imminent rate cut is there, but the timing is the crucial thing. That's what the market has been anticipating at this point of time. The one interesting fact, Suyash, we need to identify and we need to acknowledge is, okay, when the U.S. economy is buoyant, okay, the Federal Reserve try to control the inflation. When the U.S. economy is in a shaky situation, Federal Reserve is the rescuer. So, Fed, we can't fight with the Fed. We need to wait and watch the Fed movements. But rate cut is imminent. When is the question? Everybody across the analyst and the institutions and everyone in the financial markets are eagerly waiting for the timing.
Kranthi, definitely we can't fight with the Fed, but do you expect RBI to disagree with the Fed and go for a rate cut before them?
As the Federal Reserve is one of the key central bank. That's what RBI has been doing, Suyash. When Federal Reserve is increasing its interest rates at a very faster pace, but RBI has been maintaining the status quo. So I don't think so. RBI is in a hurry. It's going to reduce the interest rates, but first rate cut from Federal Reserve is essential at this point of time. I don't think so. RBI is in a hurry to go and jump a rate cut in India. They are going to have a accommodative stance at this point of time. But we need to see how the things are going to unfold. We need to have a good monsoon, and the coming Indian economy is getting into election mode. So these are the factors that are going to play now. But we need to have a decent monsoon. Once the cool off of inflation is concerned, that is extremely crucial. But I'll say RBI is not in a hurry to take a first step to cut the rate. I don't think so.
Mr. Bathini, we spoke about IT, we spoke about banking today. There's another sector I would like to pick your brains on, which has been in the news. That's the mining space. We were talking about the stocks in the mining space. My first question is it a phase of profit booking right now? Whether we look at Adani Enterprises, yearly gains 105, only 11 in the last 1 month. 20 microns, 125% in the last 1 year, in the negative at 5.47. GMDC, 188% in the last 1 year, in the negative. Same is the story with MMTC, Hindustan Copper, big gains in the last 1 year, but in the negative right now. Because of the bids in mines by big companies, whether it is JSW or Coal India or NLC or NALCO, is it a time of where investors are booking profits right now? And is it just a blip, or the correction is going to be longer? What do you make of the sector?
if we see the mining as a sector, it is always in cyclical in nature. Right now, given the kind of the growth prospects and the capex cycle is that's taking place, the core sector, the mining is going to take the benefit, and the government's policy towards the mining sector also help these stocks to rally. And the stocks have given in majority of the stocks have given fabulous returns in the medium to short term. So if the investor is a long-term investors, definitely they can hold on to this position because there can be meaningful upside for these stocks. But if at all the investors are taking a trading positions in a medium to short term, definitely they can take back some cash from the table. They can take back at least their capital from the table. But if the investor is pretty much long term in nature, definitely they can hold on because of the growth prospects of domestic demand that's going to have in the metal and commodity cycle is concerned, as well as the global growth cycle also going to pick up in the middle of the year. So the mining stocks are going to take benefit from these heightened activity. The one other thing is it can be good for the Indian economy, whereas the mining stocks can have some kind of rub-off effect in the medium to short term. That is the China growth story that has been the headwind for these companies. But given the kind of measures that Chinese government is taking to get into the growth path, it's taking time. But in terms of the Indian perspective, one can hold on to the stocks. There can be a meaningful upside for these stocks from this level also. But medium to short term traders, they can book profit from the table.
All right, and before we let you go, Kranthi, one stock that I wanted to talk to you about is Paytm. Fourth day in the upper circuit, it's up somewhere around 22% in just since Friday, in fact, in just a matter of 4 days. And a slew of good reports came out for the company. It has tied up, it has partnered with Axis Bank for its nodal services. RBI has given it an extension for the restrictions on payments bank to now it's March 15th. Earlier it was February 29th. We have had good brokerage reports on the stock. Bernstein, for instance, has given a target of about 600 on the stock. It has a buy call. What's your take on Paytm now? Has the stock bottomed out, or do you think that the rise and the fall will only be news based from here on?
Suyash, for the variety of reasons, last year it was Adani Group, this year is Paytm. So the reasons might be different. Right now, coming to the point, it is in a speculative zone at this point of time, but the valuation seems to be attractive for a medium to longer term basis. But the news, it is going through a very rough weather at this point of time. The stock, the kind of mixed news, one day positive news, one day the negative news, that has been hampering the sentiment of the stock is concerned. This is probably suitable to the high risk appetite investors, the people, investors who are very risk averse. It's not the stock to be, despite of the valuation story is concerned. But the stock have an immense strong brand right now due to the disruption, due to the implications of RBI is concerned. How they are going to weather this turbulent time in next few months? Probably one need to watch for next one quarter earnings. What kind of impact the current turbulence is creating? Whether they could able to sustain the customers, whether they could able to keep the customers not losing to the competition, and how the incremental increase of the customers to their wallet over a period of time. This is extremely crucial for Paytm. So फिलहाल Paytm करना बोले तो one need to wait in terms of the stock investing is concerned. But at this point of time, we don't see any kind of disturbance with respect to their business is concerned. So just watch carefully how the things are going to be, how they are going to increase the revenue, how the lending book is going to be over a period of time. One thing is they need to increase the revenue. They should not compromise the profitability. If they have these two templates, we can see the price to sustain.
All right. Words of wisdom coming from Mr. Kranthi Bathini. Sir, appreciate your time, appreciate your thoughts. Thank you for joining us here on News 9.
Thanks, Suyash. Always pleasure to speak to you.